Hello, everyone, and welcome to the Monday Open, hosted by the Vantage private client team. My name is Ollie, and today I'm joined by the birthday boy, Steve. How you going, Steve?
Hey Ollie, I'm good. Yourself? Afternoon,
Yeah,
everyone.
doing very well, thank you, mate. Okay, so moving into the agenda for the video ahead. For any of our returning viewers, this will all look pretty familiar, but for any of our new faces here, this is how we normally do it. So, starting off, we'll take a look at the big events from last week and take a look at our key themes and see how these move the prices. We'll then move into the week ahead section where we'll put a spotlight on some of the major events coming up. We'll take a look at how this fits in with our key themes and give our take on where we think the prices will go. We'll then move into the technical corner. We'll put a spotlight on a couple key different markets and analyze them using our technical indicators. And then lastly, we'll move into our Q&A section where Steve and I will be answering some of your guys' most commonly asked questions from last week. So, starting off on the last week section, on your guys' screen, you will see your top traded products for last week. I think it's quite interesting. We do have the XAU AUD returning for the second week in a row. But how about you, Steve? Any surprises?
Yeah, good to see the Aussie back in, and it makes sense, especially with last week's data as well as this week.
All right, well, let's see what moved the prices in there. So, starting off on last week, we did have the Japanese bank holiday on the Monday. That was the second week running. But then we had the Swiss National Bank, who opted to hold their rates at zero point 0.0, largely to the expectations of the market. Now, I wanted to put a spotlight on this because last week I mentioned a few comments from the SNB president, Schlegel, who said he had not actually ruled out the possibility of negative interest rates. So, following the decision to hold their rates at this meeting, we did see some further comments from Schlegel, who did caution inflationary risk and said that they would cut rates further into negative if inflation falls out of their price stability range over the medium term. Basically, saying they will go quarter on quarter for that, but I did see Reuters as saying that most economists are believing the SNB cycle has the SNB easing cycle has finished. So as a result, we did see some mixed results on the Swiss franc on Thursday following the announcement. We saw the Swiss franc move lower versus the pound and the euro, while going higher against the dollar, yen, and the Aussie. Personally, I do think, given the comments from Schlegel, it did sound quite reluctant to go into negative interest rates, more based on necessity than anything. So, personally, I do think we are in for a period of holding from the SNB until we do get a bigger picture in terms of the tariffs and everything like that. Next on for last week, we had some CPI data coming out of Australia.
Yeah, the hotter than expected Aussie CPI data, so Consumer Price Index. We saw the headline data being the highest in 12 months. So the ABS know the largest contributors to annual inflation were housing, food, non-alcoholic beverages, alcohol, and tobacco. So the top five increases reported by ABC were 24.6% with electricity. So obviously with what we've mentioned previously, with the government no longer subsidising the electricity, we're seeing an increase with that. We're seeing eggs, so 15% on eggs. So it looks like you'll need to get your protein somewhere else, Ollie, especially after all those gym recovery sessions. We've also got the coffee, tea, cocoa at 13.8%. So even your daily coffee, you'll just have to cut back, I think. We've also
Start getting more expensive for you.
we've also got the tobacco at 12.6. Luckily, we don't really, both of us don't smoke. We've even got lamb and goat 9% higher. So, yeah, quite a few sort of interesting sort of increases reported there. We also saw the key trimmed mean was 2.6 in August. So that really removes the sort of volatile pricing, especially electricity. So it was really interesting to see with the CPI data, especially leaning into this week with the RBA decision coming up tomorrow. So we'll speak more about the predictions that we're seeing now with this week. We also saw the Purchasing Managers Index, so PMI index, especially with the Eurozone. Everything was pretty much weaker when it comes to manufacturing, slight increases with services, but really plays into the concerns around the Eurozone So we saw with that sort of data that the euro did drop off. We also saw the weaker than expected data within the UK, again with the Great Britain pound. So we saw weakness. We did see also weakness within US, which was fairly interesting to see how that played out. But we also had a lot of the central bank speeches. So I think from Powell's speech, especially post his other sort of speech, Powell was providing caution really around the weakening of labour data, as well as the economic caution advising that stocks are fairly high valued in his own words. So it's really interesting to see his sort of caution to the markets post when he delivered the 25 basis points cut. It was again, I would say, more of a tendency on the hawkish side. That's more going to be economic data driven. So it's going to be a wait and see till the next time that they meet. But yeah, that sort of data. There was other sort of speeches. There wasn't really too many surprises from Moran, Stephen Moran, when it comes to the Fed. So he's obviously one of the dissents and fairly dovish overall. So I don't think there's any sort of surprises with that. We did see Trump make a few sort of speeches, so we'll mention it in the key notable events. We did see the Canadian GDP higher, which was good to see, but a lot of the week was really around the GDP, which was much more than anticipated. So it came in largely like it was basically the fastest growth in 2 years, causing the US dollar to actually reverse. So we also saw the Aussie and Euro decline based on that sort of data. Obviously, the DXY or the US dollar strength that really proved a lot of. I mean, we've been speaking about the Aussie recently, and it's gone back into that sort of range that we mentioned. So looking at all of that, as well as the unemployment claims, was better than expected. We saw the durable goods, but that sort of PC index. We saw the data as expected, which was the inflation gauge, and something that was a bit of caution with the Fed. So that sort of it rounded out with the unemployment claims, but that strong US data has really put a mix in the actual data when it comes to, and we saw the markets respond towards the end of the week.
Awesome. And just wanted to touch on as well for the key and notable events. So we've got the H1B visa updates coming out of the States. Many of you probably would have seen this grabbing some headlines, but we will touch on this a little bit later in the video. We also had Trump announcing a new wave of tariffs, particularly on the pharmaceuticals. I believe it is sitting at 100%. So are expecting that to take a bit of a knock on the Aussie markets, given that we are a big exporter towards the States for those. We've also got the EU tariff threat on China. I did just want to put a bit of a spotlight on that because I have seen that according to Reuters, a German newspaper, Handelsblatt, is reporting that the EU is set to impose a 25% to 50% tariff on Chinese steel and other related products. So as of right now, the EU has not confirmed this. However, we did see previous comments from the EU Commission President Leyen earlier this month who said they would be looking to propose new methods to curb steel imports and protect domestic producers. I think if this does go through, I'm going to be expecting a bit of volatility in the European indices. So my focus will probably be looking on the DAX and we'll see how that goes. Then we also had all-time highs from both of the precious metals, which have been grabbing all the headlines so consistently. I believe gold has actually just broken above 3,800 as of about an hour ago. So watch this space. Let's see how far. And we've also got all-time highs on all four of the major US stock indices. Okay, so I'll move into for the week ahead. So starting off, we've got some public holidays. So Tuesday, we've got Canada. Wednesday through Friday, we've got China. And Friday, we've got Germany. So expect maybe a bit less liquidity in the markets around those days there. Then I just wanted to put a quick spotlight on the Japanese retail sales data, which is currently expected to print at 1.0% against the 0.4% previously. I want to speak about this in the context of the Bank of Japan, however, because I know later this week we are seeing a press conference from the Bank of Japan Governor Ueda, who is speaking. So over the previous week, we've actually seen two ex-Bank of Japan members, that's the Securities and Adachi, as well as Deutsche Bank, who have revised their forecast for the Bank of Japan in their October meeting. All of them are expecting a rate hike, or at least have not ruled out a rate hike, at the next meeting in October. They've been citing a weaker yen, high inflation with core CPI currently sitting above 3%, alongside some better than expected economic growth. Personally, I do think they probably will be more inclined to hold rates at this because Governor Ueda has seemed pretty firm on waiting for the impact of the data. But if we do see some rate hikes in this unexpectedly, we could see a period of yen strength going forward as the markets start to digest those. And then next, we've got some PMI data coming out of China.
Yeah, the China data, especially the PMIs, will really put a spotlight on how the second biggest economy is doing. Again, that in conjunction with the RBA cash rate decision, which is expected to be held as of 2:30 p.m. tomorrow, Sydney time. We're looking at basically based off that sort of CPI data that we saw last week. Reuters were forecasting basically a November cut of 70% when it comes to a November rate cut, and now that's really 50-50. So especially with that sort of higher print, we've also seen the likes of Barrenjoey, Deutsche Bank, NAB, Macquarie, and City Australia just giving their calls for just dialing back the actual rate cut in November. So even NAB's gone to suggest that maybe May 2026, instead of that sort of November and February that were kind of forecasted. So there's a lot of revisions that we're seeing, and it'll be really vital when it comes to not only the whole decision, but also around the predictions. So any sort of future hints when it comes to Michelle Bullock's speech. So I'm sure there'll be a lot of Aussie, in particular, traders just looking at that sort of data, as well as obviously local Aussies just working out when it comes to their sort of home loans. So pretty vital when it comes to what we're expecting tomorrow, and especially with the lower liquidity throughout the week, especially within sort of China, etc. That's going to be really playing to a bit of volatility maybe within the Aussie. So we'll see whether it comes out of that range again. That's sort of just below 66 price range that we've been talking about previously. We're also looking at the Swiss CPI. So I know that you've got a Swiss pair that you're going to be speaking about a little bit later. We've got the Eurozone, so it'll be interesting to see with the Eurozone how that really plays into all the PMIs that came out earlier. But a lot of the US employment data is going to really come out of the non non-farm employment change. So previously that as well as the 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 non-farm employment change, we saw really low numbers previously. It's expected to be higher this week, but it'll be really interesting to see how that plays out. Considering that the unemployment rate for the US is also going to be see whether that's ticked up or whether it's stayed around constant. So that sort of US data is probably going to be fairly vital, especially with the sort of dual mandate that Powers mentioned previously in his sort of speeches.
Lovely. And then just down the bottom of the screen as well, I'm sure most of us at home would probably know this, but we do have the Aussie clocks changing this Sunday. I'll touch a little bit more on that in the Q&A section, just things to look out for when the clocks change, but worth knowing nonetheless. We've also got a public holiday. We've got Labor Day in New South Wales, ACT, and South Australia come Monday. We didn't put it on the screen as well, but we also do have the NRL Grand Final coming up this week. Since none of our teams are in it, we actually didn't really put that on there. But Steve, you have any forecasts for that one?
I'm actually going for, I reckon it will be Broncos upset, but yeah, I really don't have any personal preferences on either team, to be honest.
Yeah, I think I'm sharing you on that one. Okay, so I think that takes us to the end of this week. So let's move into the technical corner. Let me just share my screen with everybody here. So the first market I wanted to have a look at today was the euro against the dollar. I'm starting off on the weekly chart. So you can see over the course of the year, or pretty much, yeah, since the turn of the year, we have seen it's been at a pretty strong, seen some considerable weekly gains, but I've highlighted from around the start of April till now a pretty strong ascending channel up on here. I can see most recently though it has been hovering in the lower part of the channel here. I'm seeing the opening price is pretty range bound on this. We're seeing some pretty tall wicks on either side over the previous weeks. So I want to have a look, see where the prices are going on here. Moving this into the daily chart for the Euro USD, you can see, as I've said, the price has been quite respectful of the lower part of this channel here. But for me personally, I am a buyer in this market. I'm still quite respecting on this long-term trend, and I do think, given the recent period of prices being somewhat range bound, I think we are due for a bit of a breakout here. So, as a buyer into the market, I'm looking for signals of euro strength. So I can enter in probably to aim towards the upper part of the channel. So to get a bit of a better idea of where prices are sitting now, I want to move into the 4-hourly chart. If we see down below as well, we've got our MACD line, which has actually just crossed over its signal, which typically is a strong indication of buying momentum on here. So for me personally, I'm looking for a signal to confirm the euro strength. So I'm going to be looking to see if the prices can break above its highs from Thursday. I'll be looking for an entry to target into the top area of this channel here. But given that I am going against the short-term trend from middle of September on, I do need to have an effective stop or risk management strategy in there. So I'll probably be looking to put that around the Wednesday low sort of area here with a target, as I've said, into the upper part of the channel. So the next market I wanted to take a look at was the pound against the Swiss franc, because I do feel like prices for this are at a pretty important price point as we stand now. So I've highlighted the price point here, 1.06, which has acted as a key support price on multiple occasions dating back since September 2022. And I think for this one, if we do have a look, each time it has come down to this price point to find support, we have seen a considerable bounce off. And that has happened, as I said, on the last 4 occasions. And I personally don't see any reason why that can't happen again. So for this week, I will be looking for signals of pound strength or Swiss franc weakness. So we can see if we can get a decent sized bounce on here. We'll target up towards its moving averages. So I'm just going to move this into the daily, get a bit of a better understanding of what we are looking at on here. I'm seeing down here, I'm seeing the RSI is angling pretty sharply up towards its signal line, which would tell me there is a change in momentum on the cards, obviously going against the longer term trend, going down for the pound against the Swiss franc. So I'm looking to see a signal of pound strength for this. So I can see a target for it to move higher. But given that we are seeing a pretty strong downtrend dating back pretty much since like late May, I do want to talk about this on both perspectives, because I also do think if we see the prices fail to hold on its move up and break below, we could see another move below. So to move into the 4-hourly chart to get a bit of an idea of what we're seeing here. So for me, as I said, I am expecting a bit of a bounce off this support price if the longer term trends are to be expected on this. So right now, I'll be looking for an entry as it moves up towards its moving averages, perhaps towards its 100-day moving average. But if I am entering into a buy, given I am going against the long-term trend, I need to have an effective risk management strategy. So if I'm looking for an entry up towards its moving averages, I'll be looking to enter in a stop potentially around the opening price from this morning. Likewise, if we do see the prices go up and find resistance up towards its 50-day moving average, it will be in line with its more short-term trend of a lower high price or lower resistance price. So we could see it then move lower towards this key support. And if we do see it break and hold below the key support, we could see it travel lower. So as I said, I'm looking for signals of pound strength on here. But if you are looking to enter into this market, I do think you need you should be assessing your risk management strategy just to account for any unexpected moves. Okay, so that brings us to the end of the technical section. So moving into the Q&A section. Steve, would you like to take us away with question one?
So question one is, what are H-1B visas and how will this change impact markets? So basically last week, there was a lot of talk around H-1B visas, which has gone into this week as well. And just to clarify, basically the H-1B visa allows US companies to hire foreign workers in specialized fields like tech as well as engineering. Changes to restricting the H1 visas. Basically, it's going to be charging 100K, so 100K USD per visa, which is equivalent to almost 150K AUD. So this is really going to create a sort of potential talent shortage in high skilled industries. So what it really does is it looks at getting foreign workers to actually study within the US. So generally up to 3 years, but can be extended to from 3 years and extended to 6 years. So this is basically going there, studying in university, and then eventually working up to that sort of period of time, which has really been a fairly healthy for a lot of the US tech stocks. So a lot of the US tech stocks have kind of had that sort of demand from India, as well as China, and because of that, if they've actually slowed down the influence of overseas talent, we could see, especially within India, which is probably the most impacted. You are going to see less. So Trump's really come out and said that he wants to apply this in order to ensure that the US graduates get a shot when it comes to these highs of US tech stocks. So trying to keep all the talent in-house. But yeah, it's going to be interesting to see how this pans out, especially with indices when it comes to the NASDAQ, for example.
Yeah, I think we could be seeing some volatility off the back of that once we have seen the impacts. That is. For question two, I just wanted to touch on the daylight savings to clock change. So, how does daylight savings impact financial markets? And I think, practically speaking, it'll impact us as traders in the financial markets in two key ways. First, will be adjusting around activities to timing of economic events. So particularly if you are trading around major data events, you will need to adjust your schedule for the times that you are trading. For example, if you're looking at the clock and you're saying a data release is scheduled at this certain time, I definitely recommend having a look at that on Monday once the clocks have changed, just so you make sure that you are ready for them. Secondly, it will be adjusting to differences in session gaps. So for us here in Australia, this means London will be starting a bit later on our clocks. However, we also will be a bit closer to the US, so we might catch the end of their session too. And particularly as market open and market close are typically some of the most volatile times in financial markets, it is worth just assessing that so you are not caught off guard when the clocks actually do change in there. Okay, so that brings us to the end of the video today. Recording of this will be uploaded on YouTube once we have concluded the recording. As well, we'll be posting a link in our VIP chat room as well as Telegram. We touched on it briefly there as well, but since we do have a public holiday next Monday, we will not be having a Monday open. But Steve and I are looking to continue the discussion with all of you. So please make sure to join us in the VIP chat room as well as on Telegram to keep up to date with any major events for next week. I'll be posting in there quite frequently alongside a number of analysts from the Everest Fortune Group. I think that's all from me now. Thank you very much, Steve, and thank you everyone for watching.
Thanks, everyone. Enjoy your afternoon.